AgCountry offers a wide range of internal growth. If you have a goal in mind and you put your mind to it, your successes can be endless.
There are so many jobs within this company that you can rotate into.
I like challenges. AgCountry gives me challenges.
Yeah, AgCountry is a great place to work. There's plenty of flexibility. You're never tied to your desk. There's a team here that is always there for you.
Yeah, grab your role and run with it. And always be aware of the opportunities because they're in front of you.
All right, folks, I think we're going to get started with the next portion of the program. I know a lot of folks are here to see the administrator. Really want to thank Administrator Beam for coming up to Fargo today and spending some time in the region. I'm Andy Martin. I'm the VP of Legislative and Public Affairs for AgCountry Farm Credit Services. We're just getting some thoughts on it being a little echoey in here. I don't know if we need to go up or down. So working on it back there. So again, Andy Martin, AgCountry Farm Credit Services, work on the Legislative and Public Affairs team. I'm going to chat with you a little bit about, if you were here for the administrator, there might be a little bit of duplication, but we can work through that, and maybe I can add some depth in some areas or some new information and flavor. But I was hoping today to talk about farm policy, what's happening in Washington, D.C., give you some updates there, talk about the One Big Beautiful Bill Act, and really this is meant to be an interactive experience. That means questions, comments, thoughts. So please feel free to raise your hand and jump in and ask questions. I'd be happy to chit-chat with you here as we go through the presentation. So I'm going to start talking a little bit about what's happened so far in 2025 since the election, what Congress has been focusing on. Really spent quite a bit of time talking about the One Big Beautiful Bill that was passed in July and is getting implemented right now. There's a lot of folks out there talking about the economic conditions in agriculture and whether or not there's a need for more ad hoc assistance at the end of the year. There's people talking about, we did some of the Farm Bill in the One Big Beautiful Bill, but do we need to do the rest of the Farm Bill? Farm Bill 2.0 or Farm Bill Light, a lot of people are calling it. And then I'll also touch a little bit on kind of what else is on the Congress's agenda, the to-do list for the remainder of 2025. There's some deadlines coming up at the end of the year. So looking back here, last fall we had an election, right? Republicans took control of the Senate, they kept control of the House, and obviously Donald Trump was reelected or was elected as president to a second term. And so now there's this governing trifecta in Washington where one party controls the presidency and both houses of Congress. Those majorities in the Senate and the House are very slim, but it's still a governing majority, and so it gives them the opportunity to use some procedural mechanisms to really force the agenda in D.C. coming from that Republican perspective. Coming into the beginning of the year, we knew no matter who was in power, there was going to have to be a discussion about the Tax Cuts and Jobs Act of 2017 because a lot of those provisions were set to expire at the end of the 2025 calendar year. So a lot of the first half of the year, that's what the conversation was about in DC. Other things they were focused on was the parts of or discussions about the debt ceiling. The federal government was kind of running into that statutory cap of how much money they could spend or borrow. And there was a deadline coming kind of midsummer, late or early fall. Other conversations as a result of the election was there going to be significant cuts to the federal spending and was the federal deficit going to be addressed? And then, of course, important to agriculture, what are we going to do with the 2018 Farm Bill? Because it was expired originally in 2023. Congress passed a one-year extension, so at the end of 2024, they had to pass another one-year extension. And so the question was going to be, are we going to pass a farm bill? Are we going to do another extension? Are we going to try to do things in budget reconciliation? Well, we're going to talk a little bit about all those things here. So in the One Big Beautiful Bill Act, that was the budget reconciliation bill that was passed right before the 4th of July. And in it was obviously a lot of pieces important to agriculture. If you were here earlier, you heard the administrator talking about all the different things that FSA is trying to implement as a result of this. There was big changes to ARC and PLC and base acres, a lot of changes to crop insurance, payment limit rates have been adjusted, disaster programs have been kind of beefed up, big changes in the conservation title and additional resources there. And then, of course, there are a lot of tax provisions really important to agriculture and small businesses that were included in that bill. So we're going to go through those kind of one by one. PLC reference prices. This is kind of the big ticket item when it comes to what was included in the One Big Beautiful Bill that would typically be included in a farm bill. So the commodity title is Title I of the Farm Bill, so that's why I have it referenced there. And really what happened there is reference prices for basically all covered commodities were increased, and they kept this thing that they call the effective reference price and the statutory reference price. And what the One Big Beautiful Bill Act did was increase that statutory reference price, and there was impacts there on the backside on what the effective reference price was. They come up to that. They get that result based on a 5-year Olympic average of pricing for specific commodities. And then another key thing is they put increases to PLC pricing sort of on autopilot once we get to 2031, meaning there's going to be slight increases each year beginning in, 2023. So that reference price is going to go up each year beginning in 2023. Something to look for in the future. What does it mean today? The statutory reference price in the 2018 Farm Bill was set at these amounts for these commodities. I just kind of picked 3 of the bigger ones here in the region. So for corn specifically, we saw a statutory reference price go from $3.70 to $4.10. That was about an 11% change. Soybeans, a little bit bigger increase, $8.40 to $10, nearly 20%. And then wheat, $5.50 to $6.35, that's an increase of 15%. If you look at the other commodities, that increase was really in that 10 to 20% range for most commodities, and certainly the commodities that we grow in our region. Okay, this chart's really small, so I'll try to go over this, but what does that mean for the effective reference price? If you look here on the left, you've got the statutory reference prices. That yellow line, the orangish yellow line, that's the statutory reference price based on the 2018 Farm Bill, $3.70 for corn. The blue line is what was enacted in the One Big Beautiful Bill Act. Corn is now $4.10, so that's why you see on the left-hand side those 2 static lines. The effective reference price for corn, that's the one that's going to go up and down a little bit based on actual price, market prices of corn. The effective reference price prior to the One Big Beautiful Bill Act was scheduled to be in that $4.26 range. Now, as a result of the One Big Beautiful Bill, we're looking at a little bit more than $4.40. So you do see an uptick there in the effective reference price estimated for 2025. And that price should hold steady for a couple years before it starts to decline and really looking at what farmers are getting for their commodities right now. Similar story for soybeans. Again, an effective reference price looking into 2025, just above $9.50. With the new language, the new law that was passed, That's going to bump up more to the 1050, 1060 range. Other changes to ARC and PLC. Some are changes, some maintaining of what we have, but farmers every year have to go in to the local county office and elect either ARC or PLC as that commodity support program. That's not going to change. You're still going to have to make that election every year. The caveat is in 2025, because they changed this midstream, doesn't matter what you picked at the beginning of the crop year, you're going to get the higher of either ARC or PLC. It's a one-year deal, and starting again in 2026, you'll have to go back in and make the selection. PLC payments, I mentioned that there's going to be paid out at the higher of that statutory price, or the higher the statutory or the effective. That statutory reference price is always going to figure out to be the ARC trigger price, the floor of the ARC trigger price. There are some other improvements made to ARC, including changing that guarantee increase from 86 to 90%, and also the payment rate calculation going from 10% to 12.5%. Here's a big one. The administrator talked about this, but there's going to be a base acre update. 30 million acres are going to be added to base beginning in 2026. It's going to be based on a recent planting history. Your current base is not going to change, but you're going to be able to have an opportunity to add to that. It's going to be available to landowners beginning in 2026, and once USDA gets around to rolling out the rules on what the way that you can apply for base acre updates, if they receive applications for, say, 60 million in new base acres, requests for 60 million, they're going to have to prorate that amount. So if you requested, we'll use a round number, 100 new acres, and overall in the nation there was 60 million requested, you're probably only going to get about 50 new base acres. We don't know all the rules. We don't know any of the rules, to be frank, because FSA is still rolling out other portions of the legislation, and we're expecting the base acres to be more a few months away from any announcements on how that's going to look. But the key thing will be you'll need to go in to the USDA and have those conversations with your county staff. Other big changes included in the One Big Beautiful Bill: crop insurance. A couple of big things there. Really beefing up the premium support for SCO, supplemental coverage option insurance. Premium support currently is at 65% for that program. It's going to go up to 80%. That means for you, the producer, you were paying 35% of that premium. Now you're only going to be paying 20%. My math says that's a 43% reduction in SCO coverage. You really need to be talking to your crop insurance agents about what that means for you and your farm. Beginning in 2027, SCOs, the deductible for SCO is going to go from 86% to 90%. So there's more support there as well. Some other smaller changes in 2026, you're going to be able to get that same band of coverage, but you're going to have to use ECO. That was something that RMA just announced here a week or two ago. And then I mentioned ARC and PLC and having to make that selection at USDA every year. New in that process is it doesn't matter if you elected ARC, you'll still be eligible to select SCO. Previously, if you had elected ARC as your commodity support, you couldn't purchase SCO. Going forward, you are now going to be able to have both. We do have some crop insurance agents in the room, and so if you do have questions about this at the end, feel free to come up to us and let us know, because we can explain these a little bit more. For our beginning farmers, really beefed up the programs there as well. This is a really good program. Current law had it as a 5-year program. For the first 5 years as a beginning farmer, you got an additional premium support of 10%. Now they've stretched that out to 10 years, and they've beefed it up even further for the first 5 years. In that first year of farming, you're going to get a 15% additional premium support, phased down until about year 5. Then you'll have that 10% from years 5 through 10. If you're in that band of people that kind of phased out of premium support, but you're still considered a beginning farmer, you can go in and apply again and do that beginning farmer application with USDA for the next crop season. So you'll want to be doing that and talking to your young farmers that you know to make sure they're doing that. Payment limits are going up. Annual payment limits were set at $125,000 per entity. Now they're going to be $155,000, and they're going to be indexed annually to inflation. Farmers receiving 75% of their income from agriculture-related activities are going to be exempt from some of the income-based eligibility limits. And then also, they changed the way that certain entities are allowed to receive multiple payments. So in reality, this is just really going to simplify the way that farmers can structure their farms and make it a little bit easier for them to make sure that they can get the support that they have on the way that their farms are structured. A couple of disaster programs got beefed up. If you have livestock, the payment rates increased there on a few different things. Livestock forage program was beefed up, and then the ELAP program was also beefed up. Conservation programs, here's one where Congress decided that they were going to take the improvements that were included in the Inflation Reduction Act that were for programs like or for EQIP, programs that farmers can elect to use all the time. And instead of spending those money over the next couple of years, they stretched that over to the next 10 years, and they were able to add that into permanent baseline funding. So what that amounts to is basically a 55% increase in the total number of dollars available in 10 years to the EQIP program. Again, an oversubscribed program, meaning there's more applications than dollars available every year, so farmers clearly like that program. And then also CSP is going to have that additional increase as well of about 36% over that next 10 years. So that was something that both sides of the aisle supported, and that was long anticipated. Moving on to some of the tax provisions that were really important to agriculture. We've, of course, have the permanency of the tax rates from the 2017 law. Those were set to revert back to what was prior to the Tax Cuts and Jobs Act of 2017, which would have been an increase for most Americans. Those are now set at a permanent into permanent law. We also have major changes to the estate tax. The 2017 bill increased the estate tax exemption from $5.5 million per person and increased that up annually to where we were at current law of $14 million a year for individuals and $28 million for couples. The law was set to expire at the end of this year, and it was going to revert back to that 2017 level. So going back to that $5.5 million and index for inflation annually. It doesn't take a lot of folks here. I would assume you would all know that with the cost of land and machinery, it doesn't take much to get to that $5.5 million mark, and so transferring your assets to the next generation can become difficult. So what Congress decided to do was to take that limit, put it at $15 million for 2026 for an individual, $30 million for couples, index for that for inflation going forward, and also make it permanent. So there's no threat of this reverting back to what was taking place in 2017 or any other year. So permanent as in until Congress decides to make changes going forward. But no threat of that changing anytime soon. There's also pieces changed to Section 179, expensing limits, and also to bonus depreciation. So if you buy machinery, if you put tile in, if you are making improvements to buildings and structures, you can expense that in the year that you made those improvements. I'm not a tax advisor. I'm not here to give tax advice. My suggestion to you would be to talk to your accountant and your tax advisors on what that might mean for your farm. But again, pretty big changes because the threat was they were going to eliminate those things. Qualified business income deductions, more commonly referred to as 199A, really big for cooperatives to allow pass-through income to come back to farmers, and the way that those deductions are now made permanent. There was threat of that ending at the end of this calendar year. I'll also mention 45Z. That's the Clean Fuel Production Tax Credit. It was set to expire at the end of 27. They extended that for 4 more years into 2031. And if we're looking at commodity prices, people say maybe we need to figure out how we can do more to create more markets domestically. This is one option for us here, and folks like the corn growers and the soybean growers are really supportive of this clean production fuel credit. Okay, that was kind of the summary of the One Big Beautiful Bill. Maybe I'll just pause for a second, see if anybody has any questions on that. If not, I can kind of get into the conversation that's been happening around ad hoc assistance, and are we going to be looking at another year of ad hoc assistance? So currently USDA is working through the assistance programs that were signed into law at the end of 2024. In December, there was a couple of major relief programs that Congress authorized, the Emergency Commodity Assistance Program and the Supplemental Disaster Relief Program. If you're an active farmer, you probably already received something for those programs already, and USDA is trying to determine if there's additional resources that can go out for those programs. What's important to remember is that those are for losses in 23 and 24. So what are we going to do about 2025? I should also mention here that the One Big Beautiful Bill Act did beef up PLC reference prices, but under current law, that money's not going to be eligible to go out until after the 2025 marketing year. So think September 30th of 2026. So no real support between now and this time next year, basically. Congress has had quite the history recently, and the administration, frankly, of supporting ad hoc assistance, whether that's been for natural disasters or economic conditions. You'll remember the WIP programs from 2017, 18, and 19. You'll remember market facilitation, MFP payments from the last Trump administration as a result of the trade negotiations going on and what the impacts to commodity prices there. Coronavirus assistance, emergency relief program, and now we've got SDRP and ECAP and ELRP. So various programs going out. My math, I did this slide pretty quickly, roughly $94 billion since 2017 has went out. I've seen other charts that have that number a little bit higher, a little bit lower, but the fact is a lot of money's gone out in recent years. So recently in Congress and in the administration, there's been an appetite for that. Will there be that same appetite this year? We've got low crop prices. We've got the history of it. We've got leaders in Congress talking about it. We've got leaders in the administration starting to talk about emergency assistance. Do they have a model they could use to roll something out quickly, like ECAP, which was just rolled out this year? You know, I mentioned that Deputy Secretary Vaden recently said maybe we need a bridge to get people to those 2026 payments for PLC, the reference prices. Recently, major leaders in Congress like Senator Thune, the majority leader from South Dakota, the chairman of the Senate Agriculture Committee, John Bozeman, the chairman of the House Agriculture Committee, G.T. Thompson, and our own Senator Hoeven here in North Dakota have all kind of signaled support for ad hoc assistance in 2025. So without making a prediction, I think signs point one way that it's certainly on the table for additional assistance this year. And I think what you're also seeing, let me just go back 1 second there, is nationally, you're seeing some pressure coming from organizations. There's been some news reporting out of Arkansas, where Chairman Bozeman is from, about the stress that the farmers there are facing. And so it might not necessarily be the conditions we face here in the upper Midwest that points to the need to ad hoc assistance, but what's happening nationally, and where are those farmers located that are experiencing stress. And if those farmers are going to get assistance, it's likely going to be a broad-based ad hoc assistance program that would get sent out by Congress. Okay, moving on to the Farm Bill, because did we do a lot of the Farm Bill in the One Big Beautiful Bill Act? I say we, as in, did Congress do enough? It wasn't me. But did Congress do a lot of the Farm Bill in the One Big Beautiful Bill? Yes, they did. But there's still a lot that didn't get done because they used a privileged motion to get the One Big Beautiful Bill passed. They used budget reconciliation. And in budget reconciliation, all you can do is taxing and spending provisions. You can't do things like tweaks to FSA loan limits and tweaks to the Rural Development Program, updating the research title of the Farm Bill. All of these things, they looked at them. They tried to get the parliamentarian to agree that they could do these things, and they weren't able to make enough progress. So all these things are still on the table. Congress will have to do something by the end of the year. Otherwise, the commodity titles and all of that will revert back to previous law. So there is a little bit of a stick for Congress to do something. Will they get to a new Farm Bill, or will they simply pass an extension I'm not sure. Part of the issue is, well, there's probably bipartisan support on a lot of these things here on the list of things to do. There's also been a big rift in that coalition that's typically been used in the last 50 years to get a farm bill across the finish line. You've got the nutrition supporters and the farm program supporters that decided 50 years ago they were going to come together and pass legislation that would support both that nutrition, the supplemental food program, and the farm programs. And because of the way that budget reconciliation was rolled out, they cut, in doing so to support the farm programs, they trimmed $168 billion in future nutrition program spending. Whether or not you agree with it, I'm not here to talk about that. I'm just telling you that it creates some issues when you look at how you're going to get a bill done going forward. Do you have the votes to pass legislation that will improve research on the farm, rural development programs, conservation programs? Can we address pesticide labeling in Prop 12? I don't know. I can tell you that there's a lot of talk in DC from key leaders that they think they can build a bridge back and get some of these things done, but those packages haven't been put on paper yet. We know the House committee is going to try to move on something, probably in October. I think that'll be the first indication of whether or not they can come back to the table and get both sides back to the table. And I'll just point out again that the Farm Bill, the remaining portions of the Farm Bill, are not like budget reconciliation. You will need bipartisan support to get the remaining portions of the Farm Bill done. On the House side, you've got certain members of the Republican caucus that have never and will never vote for a Farm Bill. On the Senate side, you need 60 votes to pass a Farm Bill. So they will need Democrats in both the House and the Senate to get Farm Bill 2.0 across the finish line. What else is on the congressional agenda for the rest of the year? Kind of taking the oxygen out of the room from what's happening in the farm economy and the need for the Farm Bill. Well, we've got fiscal year 2026 appropriations. That means the budget, the spending bills for all of the federal government for the federal fiscal year, which kicks off on October 1st of 2025, so right around the corner. You'll probably be hearing a lot about potential for a government shutdown. Leaders in both the House and the Senate are looking at ways of averting the shutdown. You also have talk of how do we get all these presidential appointees approved in the Senate, because there's a whole slew of appointees that must have a Senate vote to get approved. You're hearing about procedural reforms potentially required to get that done. Every year, Congress has to pass a defense bill, NDAA, or the National Defense Authorization Act. Probably going to get done. Again, we're just kind of looking at the laundry list of things that's going to take time to do, and the legislative calendar is getting pretty short. I think they're going to be in D.C. for about another 9 weeks between now and about Christmas. So not a lot of time left for them to get all these done. Some folks want to do another round of budget reconciliation, more tax and spending changes. I think that's looking less and less likely by the day. Ag labor reform. Previous years, everybody's talked about the need for reform in ag labor and immigration. But the thought has been, we can't do that until we secure the border. Now the border's been secured, so are they going to be able to do anything to reform H-2A visas and whatnot? Not saying that it's likely, I'm just saying that it's on people's mind and it's part of the discussion in Washington. Another big thing that happened with the One Big Beautiful Bill, what wasn't in it was an extension of the Affordable Care Act tax credits. And there's bipartisan support for these tax credits. And Congress right now is trying to figure out if that'll be part of the negotiations for federal fiscal year 2026 spending. There's a lot of people talking about a ban on congressional stock ownership. There's other things I could have put up here that were kind of what I would describe as distractions for leadership, and the ban is one of them, because there's things members of Congress can do that force votes on these things that maybe leadership doesn't want to do, but it takes up a lot of floor time and a lot of oxygen in DC. So when we think about all of these different things, what time is left to get a Farm Bill 2.0 done? What time is left to get ad hoc assistance done? It sort of really remains to be seen. So if my memory's right, yep, I got to my end of my slides here. I went through a lot of information. I remember at the beginning I said this is meant to be interactive, so I really am hoping now we've got some questions or some counterpoints that people would like to make or clarifications on any of this. So looking to you if we've got any of those. Questions about crop insurance, tax policy. So is this still on? Here we go. So I think what you're asking, when folks in DC are talking about a bridge payment to help farmers between now and September or the end of the federal fiscal year next year, is that right? So I think that could take a couple of different forms. One of them would be an advance payment on what you might get for a PLC payment, and then they would do a calculation at the end of the fiscal year and say, you're due more money, maybe you're due less money. What do they do if you're due less money? Do they come back and claw money back from you? I think that creates a little bit of problems, but it is something that they're considering doing. If I had to guess, if I had $1 to go to Vegas and make a bet, I would say they're probably looking at something more like the ECAP program, something that's not based on a prepayment of PLC. They would call that, in a sense, a bridge, but it would really be different than a prepayment of a PLC reference price payment. Does that answer?
Well, yeah, I realize it's a guess.
Everything's a guess, right? A look back on previous history and taking a best educated stab at it. So the question is improvements to land, tiling specifically. Construction was done in 24, payment wasn't made until 25. Are you going to be eligible to do that bonus depreciation and write that all off in 1 year? Talk to your tax advisor. My understanding is it's the year that it was placed into service, but I'm not a tax guy. I know this much about it. So, now what's the? You paid for it in January. Actually, they didn't change it until July. Again, talk to your tax advisor, but because you put it in service when the law was in place, and you paid for it now in a year that it would be used, I would think they would try to make that work, but I don't want to guess what IRS is going to do. If you put it into place this year, yeah, you can, is the way I understand it. Again, you're talking about when you pay for it and when you put it into service. I would really talk to your tax guy. I think you're going to be okay, but I'm guessing. Guess here, guess here. Who else wants me to guess? Yeah, let's catch up here at the end. But, there's important agriculture research being done at land-grant universities and elsewhere, and we just want to be sure that those research activities can continue going forward. So. When that research happens, locally, you're getting it on local commodities, right? Things that can help farmers in this region. So yeah, we want to see that be maintained as well. I don't have any other slides. I'll stick around. Small group, I'm sure we can all have a conversation here. So really appreciate you sticking around, listening in. Take advantage of that tax advice, the crop insurance advice. Talk to your loan officers. There's a lot of new information. Talk to your FSA offices. There's a lot of new stuff happening, and it's going to take a little bit of time to digest it all, even for the people that follow it day in and day out. So I totally understand it's going to be an ongoing process for everybody else as well. So thank you so much. Glad to be here. Thank you, Red River Farm Network, for having us.
AgCountry offers a wide range of internal growth. If you have a goal in mind and you put your mind to it, your successes can be endless.
There are so many jobs within this company that you can rotate into.
I like challenges. AgCountry gives me challenges.
Yeah, AgCountry is a great place to work. There's plenty of flexibility. You're never tied to your desk. There's a team here that is always there for you.
Yeah, grab your role and run with it, and always be aware of the opportunities because they're in front of you.